Bismillah ar-Rahman ar-Rahim. This is your lecture number 3, and we are connecting this lecture to the previous lecture, Understanding Interest Rates. We were discussing in the interest rates calculation chapter that interest rate is the amount that people charge on the money. It is the cost of borrowing. It is the price that you pay for using somebody else's money. And the people who charge this interest rate, they have got their reasons, because the money which they give you today has got higher value as compared to the value when they will get it back in the future, because a lot of reasons. The one reason, as we discussed, was the lost interest rate. If you have got $1 today, and if you get the same dollar after 1 year, they are the two different kind of things, and they have got different values. And similarly, like we were discussing about this yield to maturity concept. And in this yield to maturity concept, we discussed that how we can measure kind of a benchmark interest rate for the products that we learned or discussed. Like we discussed 4 different kinds of products, financial products. And these all products that we discussed were the simple loans, fixed payment loans, coupon bonds, and discount bonds. And somehow we saw that how the yield to maturity on every bond or every kind of the credit instrument or the loan instrument is calculated. And we discussed that why this is important, and why do we use that interest rate calculations, and how do we use that interest rate calculations. As we discussed, like that this particular interest rate tells you about that the minimum interest rate that you actually accept in relation to the other kind of the investments. And this is really important to calculate the yield to maturity. Economics, as we have learned about making decisions between different alternatives, every alternate has got its value. Whenever you go for one particular alternate, you lose the value from the other alternate, and the best alternative's value is your opportunity cost. Unless you are able to evaluate the returns from different kind of products, you will not be able to compare one product with the other product. Like, say, for example, if you are comparing interest rates on one bond with the interest rates on another bond, and if you somehow have got proper calculations about the returns of the both bonds, you will be able to make a clear decision that which bond you should invest in. Similarly, if you have got the interest rate valuations for the different kinds of alternatives that you have, like, say, for example, the money that you could invest in, buying a plant, the money you can invest in something else which actually can give you return. And if you somehow compare the returns with the returns that you could get from the risk-free bonds of the government, and you try to compare that what kind of investment is this, like, how much money is flowing out and how much money in the future in the discounted term is going to come in. So this is what something was a subject and the idea of the last chapter. Now, basically, we are going to talk about the behavior of interest rates, how interest rates behave. It's a very, very important chapter in the sense because, again, as I told you, that interest rate is the most watched and most cared about concept. Everybody cares about the interest rates, prevailing interest rates in the economy, because all of their decisions, be it is a household, a firm, government, organization, corporation, NGO, whatever you talk about, every single entity has got so much dependence or their relationship on the interest rates. You must be knowing that how interest rates are behaving and how interest rates are going to behave. What kind of variables can affect the interest rate? What kind of variables can change the interest rate in the upward direction? And what kind of variables can change your interest rates in the downward direction? Now, what are the different objectives of this particular chapter? We are going to learn that how interest rate is determined at the first place. You must be wondering that how interest rates are determined. We discussed a bit about this interest rate determination in the last chapter. We will be talking in detail about that how interest rates is determined, why this interest rate actually goes up and goes down. And and there is a second point is like, we will be trying to relate this discovery of interest rates with a like, bond market. And we use the concept of the bond market, like say, for example, we learned for the discount bonds that there is a negative relationship between the interest rates on the bonds and the price of the bond. Now, you can determine the price of a bond in the bond market through demand of the bond and supply of the bond. And if you know the price of the bond, you can always determine the interest rate. Like say, for example, if the interest rate, if say, for example, a dollar has got the face value of $1,000 and it is being traded in the market at $800, it means that on $1,000 bond, you are going to get $200 return. Now, if you somehow divide this 200 with 1,000 and multiply with 100 again, you can find out the interest rate on that bond. And this is one of the ways of finding out the interest rates. So what actually we do, initially we use the bond market to determine the interest rates. And to determine this interest rates, we try to use the relationship between the price of the bond and the interest rates on the bond. And as you know, being economic students, the price of the products are determined, prices of the products are determined in the market through demand and supply of those particular kind of a commodity. So we will be using the price concept or the price value to determine the interest rate value. So it means that, like, when the price goes up, the interest rate goes down. When the price goes down, the interest rate goes up. So in that way, we do not only determine the interest rates, but we also determine that how these interest rates are going to change in the future, because we know that the bonds demand and supply change because of certain reasons that we are going to study in this particular chapter. And we can see, like, if the changes are coming into that, and if these changes are going to increase the price of the bond up, if these changes are going to change the price of the bond up, we should be expecting the interest rates to go down. And if the changes that we will be discussing are making the prices of the bond down, we can assume, or we can think about that, like, that the interest rates are going to go up. So this is the up and down interest rates will be depending on the changes in the price of the bond. If the price goes up, the interest rate goes down. If the price goes down, price of the bond, of course, and this price of the bond you can determine through the demand and supply of the bond. And that what happens. So to do this, we make use of supply and demand analysis of the bond markets. That's what the third point says to you on this screen. And this particular supply and demand of the bond, actually, when you know about it, that when you draw a supply curve or the demand curve, like you take price on the y-axis and quantity of that particular thing on the x-axis. So somehow, if you know the demand of the bond, which is assuming so far that it is a downward sloping curve, and supply of the bond, which so far we are assuming that it is a upward sloping curve, so we can always determine that at what point this price will be determined. And if you know this price, you can compare this price with the face value. And the difference between the price and the face value divided by the price of that particular bond can determine the interest rates. So interest rate discovery is important. But and somehow you know that what will bring this demand up, what will bring this demand down, what will bring this supply up, what will bring this supply down. So you can always also find out that what will be the new equilibrium price. Say, for example, this. Say, for example, this. Say, for example, this. Say, for example, this. So they are all basically will be depending on that how the demand and supply of the bonds are changing, and how this supply and demand change of the demand of the bond are going to affect the equilibrium price level of the market.
Sir, can you show the calculations for finding the interest rates are based on face value
Sure,
divided
we
by?
will. Sure. The face value one. You remember, like, if you remember, I show you here. Like, do you remember that when we were talking about the discount rate, like the yield to maturity of the discount rate, what we did, we subtract the price from the face value, and we divide the whole fraction with the price of that particular bond. Like, assume that the face value of the bond is, say, for example, $1,000. And the price at which this bond is available is, say, for example, $800. So can you calculate the interest rate on this bond?
Yes, sir. Inshallah.
Yeah, if you divide 200 by 800 and multiply that with 100, you can get the interest rate on this bond. uh, who asked this question? Okay, so these were the objectives of this particular chapter. Does anybody want to say something? Okay, these were the objectives of this particular chapter, that we are going to learn how interest rate is determined and how that interest rate changes over time. And for the initially, we are using the bond market to determine the interest rates. Now, what is the asset? Like, say, for example, if you think about an asset, you know, the financial products that you have can be both your assets and your liabilities. Like, say, for example, when you open an account with a commercial bank, like Anusha did, when you open an account and you put your money into your account, the money that you put into the account is your, what will be the kind of, what will be the nature of that particular deposit? Will that be treated as your asset or liability? What?
Asset.
Asset, of course. And similarly, the same money that you are depositing with the bank is its liability. It is asset for you and it is a liability for the bank. The banks are borrowing that money from you. In case of the need, you can go to the bank and you can withdraw that money. All right, this is your asset, and the banks actually treat it as a liability. The liability is that they have to return whenever you demand so. Like, say, for example, again, if I give the example of Anusha's account, she has opened a current account, and in that current account, she can go anytime to the bank and can withdraw money that she has kept with the bank. The bank, by law, is responsible and is liable to return the money which Anusha has kept with the bank. It means that the money which actually bank has is its liability. And this liability it has created, it has taken a loan from the people, and this loan is your asset, but this is a liability for the commercial bank. Similarly, when you buy a bond, what will you treat it as? When you buy a bond, like, say, for example, you buy a discount bond or coupon bond or any kind of a bond, what will you be treating it as in your books, in your financial statements? Will you be treating it as liability or an asset?
तो हमारे
That
हमारे लिए तो एसेट होगा, और जिस भी कंपनी में हम एक्वायर होंगे, इस कंपनी या मतलब बैंक जो भी, उसके लिए वो लायबिलिटी होगा.
Yes, very good, Roha. Thank you very much. And that is quite true. Like, the bond that you are buying is your asset, but the company that is issuing that bond is a liability that, like, for that. What the liability means, that particular company is creating a liability. That particular company is borrowing money from you and you are lending this money to the company. So it means that the people who are lending, actually, they have got this bond as an asset. And the company who is borrowing is the company which is actually creating a liability for itself. So what is an asset? When you buy a bond, like, actually we need to learn this definition of asset, because we are going to look at the market of bonds, and bond is treated both as an asset and liability. But since we are talking from the perspective of a lender, so we will be learning, or we will be treating it as an asset. So if you look at the definition of an asset, asset is a piece of property that is a store of value. Like, say, for example, why do you keep money? Money is a store of value. Why do you keep gold? Gold is a store of value. Why do you keep bonds? Similarly, why do you keep like shares? Why do you keep houses? Why do you keep equipments? Why do you keep manufacturing machineries? All actually are some store of value. You store value, you store your value, you put your value into that particular machine, you put your value into that particular bond, you put your value into that particular money, you put your value into that particular house, and that value that you put into that is your asset. Like, the asset is something which is valuable to you. And another definition, will anybody tell some other definition of asset to us? कोई और definition अगर आपके जहन में हो, तो will you be able to tell us? Another definition of an asset could be that asset is something that can be used as a, like, that has got value in exchange. An asset is something that has got value in exchange. Like, say, for example, if you have got some, like, some kind of an, some kind of a working machine that is working and that is producing. If you take it to the market, what you can do, you can sell that machine for something, some money. You can sell that machine some value, like, you can sell that machine for some kind of return. So it means that this machine was worthwhile. That was an asset. But if, say, for example, you have got something at your home, and if you take it to the market to sell, nobody is willing to buy it. And if even somebody is willing to buy it, nobody is giving you, no, so if somebody is willing to take it, no one is going to give you some kind of money or value against this. So that will be not treated your asset. Asset is something that has got a store of value, and that has got value in exchange. That has got what? Value in exchange. All right. So asset is something that has got some value in exchange, and that can be treated as a store of value. So facing the question of whether to buy and hold an asset, or whether to buy one asset rather than another asset, must depend on certain conditions. To talk about those assets. So we are going to learn that what kind of assets you buy and how do you make a decision about an asset. Okay. We are talking about the determinants of an asset demand. The very first determinant for the asset of demand is the wealth. To buy an asset, you should have some money. To buy an asset, you should have got some wealth. To buy an asset, you should have got resources. Like, say, for example, who buys a house? Who has money? Who has wealth? Who buys machines? Who buys bonds? Who buys shares? That has got the wealth. The more wealth you have, the more assets you buy. The less wealth you have, less assets you buy. So this is what basically happens with your wealth. The first determinant of an asset demand is wealth. When wealth of people increases, what should happen with the demand of assets? When wealth of people increases, what should happen with the demand? It should
Demand
increase.
of assets also increases.
Yeah, it increases because when the people have got more money, they would like to buy more assets. Like, आपके पास पैसे ज़्यादा होंगे तो आप ज़्यादा shares खरीदेंगे, ज़्यादा bonds खरीदेंगे, ज़्यादा घर खरीदेंगे, ज़्यादा machines खरीदेंगे, ज़्यादा plants खरीदेंगे. So अगर आपके पास पैसे कम होंगे, if you are less wealthy, so you will be buying less number of houses, less number of machines, less number of plants, less number of everything. Second thing, why do you buy an asset? As we were talking about, you buy an asset for expected returns. Expected returns means the future returns.
Future value.
जी, अगर आपको कोई एसेट, आप ऐसा हो मिसाल पे कोई एक ऐसी जगह पे आप घर खरीद रहे हो जहां पे आपको लगे कि घर खरीदने से आपको फायदा नहीं होगा या बहुत कम फायदा होगा या नुकसान होगा, तो ऐसी जगह पर आप घर नहीं खरीदेंगे. If you are an investor and you want to buy a house for investing your money, you will not buy a house on which you are not going to get some, or you are not expecting to get some return on it. So return, expected return on asset is something that actually determines you that should you buy an asset or not. And similarly, when you compare two assets, when you compare one asset A with another asset B, you always have to have in your mind that what is the expected return on asset A and what is the expected return on asset B. All right. So the expected return is another determinant of an asset demand. As you can see, like, the first factor is the wealth. And how much wealth do you have? How much money do you have to buy an asset? The more money you have got, the higher is the number of assets that you will keep. Similarly, if the expected return is higher, you will buy more assets. Like, say, for example, you will be going for getting higher returns on the assets. But along with this return, you also have to keep in your mind the risks. What is the risk on that asset? Like, say, for example, sometimes the return that you get on the asset is very high, but the risk is also very high. Like, say, for example, if you go and make investments in mutual funds. Mutual fund is a pool of funds in which a company pool of funds or money from different sources. They actually just pooled that all money together. And by pooling that all money together, they basically create a big pool. And this big pool, they make they make investments with that pool. Like say for example 100 लोग हैं, 100 लोग 1,000 रुपए जमा करते हैं, तो उनके पास 1 लाख रुपए हो जाएंगे. And what they will do with 1 lakh रुपए, they will make investments with it, and whatever return will come to them, they will share it with their people, with the people basically who has made investments into this. Now think about it, that where would you invest that 100,000 rupees? Where would you invest that 100,000 rupees? You can invest that 100,000 rupees in government bonds. You can invest that 100,000 rupees in the equity market. You can invest that 100,000 rupees in real estate. You can invest that 100,000 rupees at different places. Now, say for example, if you are investing in a bond, you will be getting a risk-free return. But of course, the returns, the rate of returns will be very, very low. But if you invest the same amount in the stock market, you will be getting very high returns, but you will be exposing yourself with high risks as well. You will be actually putting all of your money at risk, because there could be a possibility that all of money you lose. Like say for example, again, if I give you the example of Russia and this Ukraine crisis, what is happening right now, that there are so many stock markets that have literally crashed. And the crashing of these all markets is because of this crisis and the expected future disruptions in the overall economies. So the people are losing a lot of money. So when you buy an asset, you don't only consider the returns, but you also consider that how much is the risk on that particular asset. So I was giving you the example of the mutual fund. If you know that the mutual fund is going to invest in equity market, of course it can get you better returns, but it will also expose you with higher risks. So you have to consider that whether you should be buying those mutual funds or not, or you should be making investments in those mutual funds or not. Okay. Another thing that you consider for buying asset is its liquidity. How quickly you can convert that asset into cash. Like say for example, when you buy a car, which car would you like to buy for your use, say for example? Liquidity is an ability of converting the asset into cash in need, in time, in case of need of cash, or in case of need of money. If you are not able to sell that asset, like say for example, no one buys shares of such companies which are not traded in the market or which trade very less in the market. You do not buy those cars, you do not buy those motorbikes, you do not buy those houses which you are not able to sell back into the market, and how quickly you can sell it. Like say for example, आपको पता है कि CD70 जो motorbike है, इसी तरीके से बहुत सारी cars हैं, they are treated as hot cash. Hot cash का मतलब क्या है कि like say for example, you use it as long as you want to use it, and as soon as you want to sell it, you go to the market and you are immediately able to sell that in the market. So this is called liquidity. This is called what? Liquidity. So when you buy an asset, this asset's demand will be depending on that how much wealth do you have, how much return are you expecting from it, how much risks you are able to take on that particular kind of a asset, and what kind of a liquidity available on that asset. Is that asset convertible into cash easily or not? That's what something is important. Now the wealth, we have learned about it. Holding everything else constant, an increase in wealth raises the quantity of an asset. Expected returns, and if you look at a summary of it, an increase in assets expected return relative to that of an alternative asset holding everything else unchanged raises the quantity demanded of an asset. Risks, holding everything else constant, if an asset's risk rises relative to that of the alternative assets, its quantity demand will fall. Like say for example, why people buy in equity, why people invest in equity, and why people don't invest in equity. Like say for example, if you compare equity with bonds, like say for example, if you compare shares with bonds, of course shares give you higher returns, but you also actually expose yourself with higher risks. So the shares are riskier than bonds. So the people, there are different kind of people in the market. One type of the people is called risk averse, and the other type of the people is called risk taker. So holding everything else constant, if an asset's risk rises relative to that of alternative assets, its quantity demanded will fall. Generally, you find both kinds in the market, like the some of the people who want to take more risks and some of the people who want to take less risk. But the general or normal behavior is that if risk on an asset increases, if the fluctuations or the chances of losing money increases on some asset, you buy less of it, like you don't buy more of it. Okay, the liquidity, again, if you look at the last point on this slide, the more liquid an asset is relative to alternative assets, holding everything else unchanged or constant, the more desirable it is. Like, generally, again, that depends on different kinds. Like, say, for example, a person who is got retired from some organization, he wants to make investments. He doesn't need investments back quickly or doesn't need liquidity. So what he does, he just invests for a long period of time. But a young person or a businessman does not want to engage or freeze his funds for long into some kind of assets. He or she only invests in those kind of assets which have got higher liquidity. So that is what something happens. But these were, when we are talking about these all kind of factors, we are talking about general factors or general behaviors about these kind of things. We are not talking about specific behaviors in specific instances, because in specific instances you can find people who do not demand liquidity because they want to make investments for longer period of time, like retired people, like widows, like disabled, like there are so many kind of people who do not want to do business or do not want to just get this money very quickly and just invest again and just like going into the pain of investing again. So they basically invest long-term investments because they get higher returns on them. So that all depends, but generally the people buy more assets which basically have got higher liquidity. So this is a chart that perhaps is a summary of all these factors. If wealth increases, the quantity demand increases. Expected return relative to other assets increases, quantity demand increases. Risk relative to other assets increases, quantity demand decreases. The downward arrow along with this variable is showing you that the change in demand is negative when the risk relative to other assets increases. Similarly, the liquidity, if the liquidity increases on some asset, the quantity demand of that asset falls, increases as well. Now, this is something I wrote in the beginning as well. This is the formula, the expected return on the discount bonds. Here, what do? You basically, to find out the interest rate, yield to maturity, you subtract prices from the face value and divide the whole fraction with the price of that particular asset. So in that way, you can find out the interest rates. And these interest rates are the opposite or inversely related with the price. If the price goes up, interest rate goes down. If the price goes down, interest rate goes up. I hope I am making sense to you guys. Am I? Okay. Now look at this diagram here. Just look at this diagram in pieces. Don't look at this diagram as a whole. First of all, look at here. So here you have got the price of bond and the price, and here you have got quantity of bonds. Now look at the demand behavior. Suppose the face value of that bond is $1,000 or 1,000 rupees. If the price of that bond is also 1,000 rupees, if the price of that bond is also 1,000 rupees, how many bonds will people buy?
0.
0. This is the intercept here. if the price is again $1,000, because if the price is $1,000 for $1,000 bond, what will be the interest rate on that bond? 0%. Okay. Okay. All right. If the price of the bond falls to 950, obviously still the price is high and you are just getting a 5.3% interest on it, which is this.
Yes, sir.
All right. So there will be some people who would be interested to buy that bond. Like say, for example, there will be some quantity of bond. This is the point basically that you get. All right. If the price, and now basically what happens is the price further falls to 900. There will be more people interested in this bond and the quantity of that will increase. If the price goes down to 800, 750, the more the price goes down, the higher is the demand. So this is the demand curve for the bond. I hope it makes sense. And along with that price of the bond, you always also have got the calculation of these interest rates. How much is the return on the bond when actually, how much is the return on $1,000 bond when you get it for 950? It is a 5.3%. And what will be the return on the $1,000 bond if you are buying it for 900 rupees? The interest rate on that bond will be what? How much will be the interest rate on that bond? 11.1%. And similarly, the bond that you are buying, like a $1,000 bond, if you buy for 850 rupees or $850, I'm sorry, the returns on that bond will be what? 17.6%. All right. So this is what basically is happening. And this is what is about the demand behavior. Now look at the supply behavior. If say, for example, the price of that bond is very low, like, say, for example, is kind of a zero, like, the supply will be zero. Like, say, for example, nobody who is holding the bond will sell in the market. But suppose if the $1,000 bond is available or in the market, the price goes to $750. There will be few people who will be interested to supply that bond because if they need the money, they will be willing to sell the bond of $1,000 for $750. At that point of time, the returns on that bond, to whom it is selling, the person लेके supply जो कर रहा होगा bond, आपके पास एक bond रखा हुआ है, आपने खरीदा हुआ है वो किसी प्राइस पे, अब आप उसको कितने प्राइस पे मार्केट में बेचेंगे? कितने प्राइस पे मार्केट में बेचेंगे? ज्यादा प्राइस पे बेचेंगे, कम प्राइस पे बेचेंगे? ज्यादा में। जितनी ज्यादा होगा उतना ज्यादा आप सप्लाई करेंगे। लेकिन अगर देखें $750 से प्राइस हो जाता है $800, तो जब कुछ और लोग आ जाएंगे सप्लाई करने के लिए मार्केट में, और $800 से हो जाता है $850, और लोग आएंगे सप्लाई करने के लिए $900, और मैक्सिमम लोग आ जाएंगे अगर जो है वो $1000 हो जाए। ऐसा ही है। अगर आप इन तमाम पॉइंट्स को मिला दें तो दैट विल बी कॉल्ड व्हाट?
Supply curve.
Supply curve of the bond. So this is supply curve of the bond, and this supply curve of the bond, look at this. Now look at the demand curve of the bond. There is a negative relationship between price and
bonds,
Demand.
quantity
demand
of
of
bond.
bonds.
जी बिल्कुल. And positive relationship with interest rate on bond and price quantity of bond.
Supply of the
Quantity of bond. Interest rate के साथ देखें, प्राइस के साथ इसका नेगेटिव रिलेशनशिप है, इंटरेस्ट रेट के साथ पॉजिटिव रिलेशन। देखिए इंटरेस्ट रेट बढ़ रहा है यहाँ पे, जीरो से क्या हो गया?
5.3.
जी, तो डिमांड बढ़ गई, 5.3 से बढ़ गया 11.1% और डिमांड बढ़ गई, 11.1% से हो गया 17.6% और डिमांड बढ़ गई। ऐसा ही है।
Yes.
प्राइस से देखिए ये बहुत इंपॉर्टेंट रिलेशनशिप बता रहा हूं आपको मैं। प्राइस से जो बॉन्ड है, क्वांटिटी ऑफ बॉन्ड है, उसका जो रिलेशनशिप होता है वो होता है नेगेटिव। प्राइस से क्वांटिटी ऑफ बॉन्ड का रिलेशनशिप क्या होता है? नेगेटिव। और इंटरेस्ट रेट से क्वांटिटी ऑफ बॉन्ड का जो डिमांडेड क्वांटिटी ऑफ बॉन्ड होती है उसका जो रिलेशनशिप होता है वो होता है पॉजिटिव। आई विल बी एक्सप्लेनिंग यू दैट। इसी तरीके से सप्लाई को देखिए, सप्लाई में अगर आप क्वांटिटी सप्लाइड ऑफ बॉन्ड को प्राइस के साथ उसका रिलेशनशिप देखेंगे तो कैसा होगा वो? The relationship between price of the bond and quantity supplied of the bond will be positive or negative?
Positive.
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 लेकिन अगर if you explain this relationship with interest rate,
Negative.
जी बिल्कुल, very good. The relationship between the supply of the quantity of the bond you supply in the market and the interest rate that is actually is available on those bonds is negative. The interest rate goes up, the supply goes down.
Sir, can you repeat this?
Yes, sure, why not? देखिए, we are actually talking about the two opposite things. We know about the relationship between price and interest rates. If the price goes up, interest rate goes down. If the price goes up, interest rate goes down. So if there is something which has got a positive relationship with the price, the demand will be what? The relationship with the interest rate will be opposite. If the quantity of bond has got a negative relationship with the price, its relationship with the interest rate should be opposite. Anusha, are you getting my point? देखिए, थोड़ा सा समझने की कोशिश
Sir,
कीजिए.
quantity of bond in demand or in supply?
देखिए, दोनों की बात आप करेंगे तो उनका रिलेशनशिप, अगर प्राइस के साथ डिमांड का रिलेशनशिप नेगेटिव है तो इंटरेस्ट रेट के साथ उसका रिलेशनशिप पॉजिटिव होगा. इसी तरीके से प्राइस का रिलेशनशिप अगर क्वांटिटी सप्लाइड और बॉन्ड के साथ पॉजिटिव है तो इंटरेस्ट रेट के साथ क्या होना चाहिए?
नेगेटिव होना चाहिए.
जी, नेगेटिव होना चाहिए. अनुषा, आर यू गेटिंग दिस पॉइंट?
Sir, थोड़ी confusion हो
जी
रही
जी, I understand that and that is a bit confusing because we are talking about the opposite things. देखिए, अगर मैं आपसे कहता हूं कि आप एक बॉन्ड जो है वो जो खरीदेंगे, आप कब सप्लाई करेंगे बॉन्ड ज्यादा? जब प्राइस ज्यादा होगा. ऐसा ही है ना
Yes, sir.
अनुषा?
Yes, sir.
आप
Yes,
मिसाल के
sir.
तौर पर आपके पास एक बॉन्ड रखा हुआ है घर में जो कि आपने $700 का खरीदा हुआ है. अब आपको जो भी प्राइस $700 से ज्यादा जितनी ज्यादा मिलेगी उतना ज्यादा आप अट्रैक्ट होंगे उस बॉन्ड को बेचने के लिए मार्केट में. ठीक है.
Yes,
अब
sir.
देखें, जब प्राइस बढ़ रहा है तो उसका मतलब है इंटरेस्ट रेट कम हो रहा है. जब प्राइस बढ़ रहा है तो उस पर इंटरेस्ट रेट क्या हो रहा है? कम हो रहा है. इसका मतलब है कि
कम हो रहा है, कम हो रहा है.
आप इंटरेस्ट रेट कम होगा तो भी आप ज्यादा सप्लाई करेंगे. मतलब अगर आप इंटरेस्ट रेट के हिसाब से इसको एक्सप्लेन करें, प्राइस का और इंटरेस्ट रेट का ऑपोजिट रिलेशनशिप है. प्राइस के साथ उसका रिलेशनशिप पॉजिटिव है और चूंकि प्राइस और इंटरेस्ट रेट का नेगेटिव रिलेशनशिप है तो इसलिए जो दूसरा रिलेशनशिप होगा क्वांटिटी सप्लाइड का इंटरेस्ट रेट के साथ वो नेगेटिव होगा. ये भी फिलहाल आपको समझ में आता है तो ठीक है, लेकिन अभी इसकी ग्राफ बनाएंगे तो इट विल बी मोर क्लियर टू यू गाइस इंशाल्लाह.
Sir, price के साथ quantity of bond का जो relationship है वो negative है
जी बिल्कुल, और
और
इंटरेस्ट रेट के साथ
interest के साथ
पॉजिटिव है.
quantity of bond positive.
जी,
ठीक है.
डिमांड का, जी डिमांड ऑफ बॉन्ड. और इसी तरीके से क्वांटिटी सप्लाइड ऑफ बॉन्ड एंड प्राइस ऑफ बॉन्ड हैज गॉट अ पॉजिटिव रिलेशनशिप, बट क्वांटिटी सप्लाइड ऑफ अ बॉन्ड एंड इंटरेस्ट रेट ऑन बॉन्ड हैज गॉट अ नेगेटिव रिलेशनशिप. देखिए, अगर यहाँ पे आप
Okay, sir.
प्राइस की जगह पे इंटरेस्ट रेट को वो करें ना, मतलब प्लॉट करें, तो ये वाला जो बॉन्ड है ये सप्लाई का बन जाएगा और ये वाला डिमांड का बन जाएगा. पर इसको इतनी कॉम्प्लिकेशंस में भी ना जाए. वी विल टॉक अबाउट दिस कॉम्प्लिकेशंस अ बिट लेटर. लेकिन व्हाट अबाउट दिस पॉइंट सी? What about this point C?
Equilibrium
Equilibrium
point.
price.
G. The
Equilibrium
price
point.
is at equilibrium. And what does that equilibrium price means? This is the quantity,
Supply and
$300 billion, which people are willing to buy and willing to sell at $850. ये बात समझ में आ रही है आप लोगों को? देखें, ये वो प्राइस है या वो क्वांटिटी है जो कि एक मखसूस प्राइस पे बेचने वाला बेचना चाहता है और खरीदने वाला खरीदना चाहता है. क्योंकि देखें, मिसाल के तौर पर अगर आप $750 पे देखें, $750 पे जो है वो सप्लाई कम है लेकिन डिमांड ज्यादा है.
ज्यादा.
क्योंकि उन लोगों को पता है कि रिटर्न बहुत ज्यादा मिलेगा अगर वो $750 का खरीदेंगे, लेकिन कोई बेचने के लिए नहीं आएगा मार्केट में. कीमत बढ़ेगी. अब $800 में भी जो है वो क्या है? देखिए, गैप है. $800 पे सप्लाई कम है लेकिन डिमांड ज्यादा है. क्यों ज्यादा है $800 पे डिमांड ज्यादा सप्लाई से?
प्राइस कम है और
जी, प्राइस कम है और रिटर्न ज्यादा है उसके ऊपर. ऐसा ही है. लेकिन ये जो सी पॉइंट है जहाँ पे $850 है, जहाँ पे इतनी डिमांड, जितनी डिमांड है उतनी ही सप्लाई है. अब $900 पे देखिए, $900 पे क्या हो रहा है?
डिमांड कम और सप्लाई ज्यादा है।
जी बिल्कुल, बेचने वाले चाहेंगे बेचना, लेकिन खरीदने वाले खरीदना नहीं चाहेंगे। इसी तरीके से $950 पे देखें, बेचने वाले चाहेंगे कि उसको बेच दें डॉलर को, क्योंकि बहुत अच्छा उनको प्राइस मिल रहा है मार्केट से, तो लेकिन खरीदने वाले उसको नहीं खरीदेंगे क्योंकि उनको बुरा प्राइस मिल रहा है। जैसे अनुषा वुड से
Sir, can you give us a short break of 5 to 10 minutes?
5 to 10 minutes.
Yes, sir. क्योंकि एक घंटे से सुन के मतलब entries.
So we were talking about the objective. Do you know what was the objective of studying this diagram here? Does anybody know that what was the objective of studying this diagram here, and why were we talking about this whole dynamics of demand and supply, and why we were interested in the point C at the first place, and what actually we have got from that point C? Does anybody know about this?
सर इस डायग्राम में तो हम यही पढ़े कि रिलेशनशिप बिटवीन प्राइस एंड बॉन्ड एंड इंटरेस्ट रेट क्वांटिटी ऑफ बॉन्ड।
That's what we studied, but what was the objective of doing this diagram? Yes, Aisha?
सर जितना इंटरेस्ट रेट ज्यादा प्रोवाइड किया जाएगा उतनी ही ज्यादा डिमांड बढ़ेगी उसकी, और जितना कम इंटरेस्ट रेट प्रोवाइड किया जाएगा उतनी ही लोग कम डिमांड करेंगे और इस चीज को कम परचेज करेंगे। तो दैट सी इज अ सर्टेन पॉइंट जहाँ पे डिमांड और सप्लाई जो है वो इक्वल हो गया, मींस 850 पे लोग लेना भी चाह रहे हैं और जो कंपनी है वो सेल करना भी चाह रही है।
Acha, what is the significance of this point C? थोड़ा सा और if you could like highlight this, Aisha. What is the significance of this point? What actually else this point is telling to you? What else this point C is
सर
telling us?
इक्विलिब्रियम पॉइंट में भी,
Yes, yes, that is very
इक्विलिब्रियम
true.
पॉइंट
Like
के
it
ये
is.
वो पॉइंट।
What else? कुछ और बात, like what I'm trying to, what I want to hear.
To understand supply and demand bonds in a broader way.
All right. Okay. And Roha, what do you want to say?
Sir, the quantity of like the bond demanded at this interest rate.
All right. देखिए, the objective, you people basically have learned this diagram well as you were responding this question. But the objective of this particular diagram was to know what will be the equilibrium interest rate in the market. This bonds markets demand curve and supply curves are being used to determine the interest rate in the market. What should be the interest rate in the market? And what we have done here, we have used the concept of demand and supply of bonds to find out what should be the equilibrium interest rate in the market. आप देखिए ना, बाज़ औक़ात आप ये समझते हैं कि मार्केट में इंटरेस्ट रेट्स बढ़ते हैं, बाज़ औक़ात मार्केट में इंटरेस्ट रेट्स कम होते हैं। असल में इंटरेस्ट रेट्स डिटरमिन कहाँ पे जाके होते हैं? Interest rates are determined at the point where the demand of the bond is equal to the supply of the bond. The price at which the demand of the bond is equal to the supply of the bond, that price actually determines the interest rate, because $1,000 bond is being sold at $850 and being bought at $850. It means that you can see here, I'm sorry, you can see here that the return on this bond is what? 1,000 minus 800 divided by 800. Sorry, I'm sorry. 850. 1,000 minus 850 divided by 850. So what interest rate is coming out is 17.6%. So the objective of this diagram, of studying this diagram, was to find out what will be the equilibrium interest rate in the market. And to find out that equilibrium interest rate in the market, we have used the bond market. We have used the interaction between the price of a bond and quantity demand of the bond, price of a bond and quantity supplied of the bond. So this is what something was the objective of this particular kind of a thing. And this particular diagram also says to you that the interest rate is above the equilibrium, somehow the market adjusts downward. And if the interest rate is below the equilibrium, the market adjusts upward, because the demanders bid different prices up and down and suppliers bid prices different up and down. All right. So it is something. Now this diagram is a bit more kind of a diagram that actually is available in your book. Now, if you look at here, that in this diagram, you have got two y-axis. On the one y-axis, you have got price of a bond. What do you have? Price of a bond. And on that, basically on the other y-axis, they are both same. Like say, for example, at $1,000, what will be the interest rate? What will be the interest? Zero.
$1,000.
जी at 1000 अगर आपको एक $1,000 का बॉन्ड है और वो $1,000 का ही प्राइस में मिल रहा है तो your interest rate on that bond will be zero. The interest rate on that bond will be zero if a $1,000 bond is available for $1,000. All right. So similarly, if that is available for $950, I'm sorry, the interest rate will be 5.3%. And similarly, if it is $900, so it's 11.1%. So this diagram and the previous diagram are exactly the same. Only the difference is that here we have been using this y-axis 2 times. And on the one time, basically on the left-hand side, we are using price. And on the right-hand side, we are using the interest rates. Does this diagram make sense to you guys?
Yes, sir.
Good. If anyone has got any question related to this, please, you can ask. One of the methods that we studied was related to the bond market. Another way of determining interest rate is using loanable funds terminology. Again, the objective of studying this theory and objective of looking at this diagram is, what should be the objective of looking at this diagram and studying this theory? What do you think?
Interest.
Objective is to find out.
Determine interest rate.
Very good. Yes. This is something you people should know, and that is the most important thing for this particular kind of a section of this particular lecture, that whatever theories we are studying with a view that we want to calculate equilibrium interest rates. Equilibrium interest rates, for initially we tried to determine that equilibrium interest rates through bond market. We saw that how the bond markets demand curve and supply curve behave, and we found out that what point the demand is equal to supply. The point at which the demand is equal to supply is the point where you determine the price of the bond, and with that price of a bond, you can always determine, if you know the equilibrium price of the bond, you can always determine the equilibrium interest rate in the market. Another theory that we are going to learn here is the loanable fund theory or loanable fund terminology. What does this loanable means? Loanable. What is the loanable fund? The loanable fund means the loan, the fund or the amount that you can give as loan, which you can lend. Generally, this is the amount that actually you save after making your all consumptions. Like a person who earns 100,000 rupees, suppose his monthly expenditures are equal to 80,000 rupees. Out of 100,000 rupees, he is spending on his day-to-day transactions and items 80,000 rupees, and he is able to save 20,000 rupees out of his 100,000 rupees income. This 20,000 rupees, whatever money he has got available, he wants to lend to someone. Like say, for example, you take this money to the bank and you lend it to the bank. Similarly, what you can do with this money, you can take this money into the market and you can buy bond. The people who demand bond are those people who basically have got some surplus funds that they can lend after making all their expenditures. Like say, for example, again, if your income is $100,000 or 100,000 rupees, I'm sorry, and you are consuming 80,000 rupees out of that 100,000 rupees, the rest of the 20,000 rupees that is available to you is the amount that you can give somebody. And why will you give it to someone?
As a loan.
as a loan. Why and what will be the consideration of that loan? What will you get in return?
Profit
Interest rates. Yes, interest,
Interest.
the profit or whatever you call it. So what does it mean? It means that this supply of loanable funds will increase if the interest rate increases. You will be saving more if you expect to get high returns. Like say for example, if in the market returns are very low, like even if you save money, if you defer your consumption and if you sacrifice your consumption, you are not going to get very high return. So there will be very few people who would like to save or who would like to supply funds. They are the savers basically who supply the loanable funds. All right. So what should be the relationship between the supply of loanable funds and interest rates? Should it be positive or negative?
positive.
Positive, of course. You will be supplying more loanable funds if the interest rate goes up, and you will be supplying less loanable funds if the interest rate is going down. So it means that the relationship between the supply of loanable funds and the interest rate will be positive. And that is what basically you can see in this diagram, and you can look at this particular curve. If the interest rate is 5.3%, the supply of loanable fund is just $100 billion. If the interest rate goes to 11.1%, the supply of loanable fund goes to
200.
Downward.
yes, and it keep rising as the interest rate goes up. Like say for example, at 33% interest rate, market can generate supply of $500 billion loanable funds. All right. Now look at the opposite side of it. Who demand this fund? Who demands this fund?
Bank.
No, like the companies. देखिए आप जो बैंक भी होते हैं जाहिर है कंपनीज होती हैं जो कंपनीज आपसे आपको बॉन्ड बेचती हैं समझ में आ रही बात आपको they are the demanders of loanable fund and supplier of bonds. They supply bonds and demand what? एक कंपनी है मेरी कंपनी है मुझे पैसों की जरूरत है मैं लोगों से उधार लेना चाहता हूं तो मैं कंपनी से मैं अपने बॉन्ड कंपनी में इशू करूंगा जब मैं कंपनी में बॉन्ड इशू करूंगा तो क्या होगा जब मैं अपनी कंपनी के बॉन्ड इशू करूंगा तो क्या होगा भाई
लोग उसे खरीदेंगे और
लोग
फंड जमा होगा
और मैं कब ज्यादा बॉन्ड ऑफर करूंगा जब इंटरेस्ट रेट ज्यादा होगा या कम होगा
कम होगा
जी बिल्कुल so what will be the relationship between the demand for loanable funds and interest rate
डिमांड का पॉजिटिव और सप्लाई का नेगेटिव है
जी सप्लाई ऑफ लोनेबल फंड्स का पॉजिटिव रिलेशनशिप है इंटरेस्ट रेट के साथ और डिमांड ऑफ लोनेबल फंड्स का नेगेटिव रिलेशनशिप है समझ रहे भैया आप लोग बात
Yes, sir.
तो ओके
सर ये रिलेशन एक दफा दोबारा रिपीट कर दें
जी so there will be a point where the demand for loanable fund will be equal to supply of loanable funds and that will be the point where the equilibrium interest rate is determined because if the demand for loanable fund is greater than the supply of loanable funds if the demand for loanable fund is greater than the supply of loanable funds what will happen people are demanding more bonds but more loans but the households are supplying less loans when this will happen
Interest rate
when the interest rate is
less.
or low very good very good yes great so when the interest rate is lower the demand for the loanable funds will be higher than the supply of loanable funds what will happen in that instance what will be the result of it
सर लोग ज्यादा इंटरेस्ट रेट पे करेंगे हाई इंटरेस्ट रेट
जी producers will bet on or bid on like they will start giving more interest rates and when they offer higher interest rates the more households will be interested for saving, and somehow the gap will bridge, and the gap squeezes between these two, demand and supply, and somehow you reach to equilibrium. And if you consider a situation, yes Anusha,
सर ये जो इक्विलिब्रियम पॉइंट है ये
this equilibrium point कैसे determine करेंगे, you were asking this question. देखें, this equilibrium point will be determined at the point where the demand is equal to supply. देखें, ये बिल्कुल इसी तरीके से है जिस तरीके से आप एक सिंपल मार्केट की बात करते हैं कि किसी मार्केट में टोमेटोज की मार्केट है, टोमेटोज के प्राइस कैसे डिटरमिन होंगे अनुषा, से फॉर एग्जांपल इफ यू कुड एक्सप्लेन दैट. या सपोज करें, देखें एक ऑटो रिक्शा आप हायर करना चाहते हैं या एक टैक्सी हायर करना चाहती हैं आप, like you want to go to certain place and you ask to that person to go to take you to that place. Suppose he demands 500 rupees, that I will charge 500 rupees to take you to that place, but you are offering say for example 400 rupees. आप चाहती हैं 400 रुपए में लेके जाए, लेकिन वो आपसे कितना डिमांड कर रहा है, 500 rupees. अब 500 रुपए कैसा प्राइस है? 500 rupees is a price where you have a supply but you don't have a demand, right? And 400 कैसा प्राइस है? 400 कैसा प्राइस है जो आप ऑफर कर रहे हैं? There is a demand at 400 but there is
no supply.
No supply. And somehow you go into the negotiation with the driver and you end up on 450 rupees. Now what will be the 450 rupees? Like how, like what about the 450 rupees? 450 rupees will be the price at which
Equilibrium
you are,
position.
where you will be willing to hire the taxi and the taxi cab driver is willing to take you to the place. 450 rupees is an equilibrium price, is the price at which both agrees. इसी तरीके से मिसाल के तौर पर मैं हाउस होल्ड हूँ, मैं अपने लोन को लेंड करना चाहता हूँ 10% पे, लेकिन जो प्रोड्यूसर्स हैं वो मुझसे बोरो करना चाहते हैं 7% पे. मैं लेंड करना चाहता हूँ 10% पे, वो मुझसे बोरो करना चाहते हैं कितने पर? 7% पे. तो क्या होगा? हमारा जो ट्रांजैक्शन होगी, I want to lend at 10% and they want to borrow at 7%. Anusha, are you with us?
सर आप अपना क्वेश्चन रिपीट कर दें काइंडली.
जी, मैं आपसे कह रहा हूँ कि मिसाल के तौर पर मैं एक हाउस होल्ड हूँ और मैं लेंडिंग करना चाहता हूँ अपने पैसे की 10% पे, लेकिन जो बिजनेस है, जो कंपनी है जो मुझसे बोरो करना चाहती है, वो मुझे सिर्फ 7% देना चाहती है. मैं लेना चाहता हूँ 10%, वो देना चाहते हैं 7%. तो क्या होगा?
नेगोशिएशन.
जी देखिए, उसमें ट्रेड नहीं होगा. मिसाल के तौर पे मैं 10% पे लैंड करना चाहता हूँ, वो 7% पे बोरो करना चाहते हैं. किस पे ट्रेड होगा? जिसपे मैं लैंड करना चाहूंगा और वो मुझसे बोरो करना चाहेंगे. ये 17.6% इस डायग्राम में वही इंटरेस्ट रेट है जिसपे लेंडर्स लैंड करने के लिए तैयार हैं $300 बिलियन और बोरोअर्स बोरो करने के लिए तैयार है $300 बिलियन, 17.6%. Does it make sense?
सर आई हैव अ क्वेश्चन.
Yes.
सर अभी जो आपने रिसेंटली एग्जांपल दी है लेंडर की और बोरोवर की, तो आपने कहा है उसमें इक्विलिब्रियम पॉइंट ये होगा जब लेंडर ने जो कितनी परसेंट रखी है 10% और बोरोवर कह रहे हैं कि 7% पे हम देंगे. इन नेगोशिएशन के बाद जो जिस पॉइंट पे दोनों एग्री होंगे वो इक्विलिब्रियम पॉइंट
वेरी
है,
गुड.
राइट?
यस वेरी मच.
ठीक है सर.
लेकिन दोनों मिसाल के तौर पे 8% पे अग्री कर जाते हैं, आप लैंडिंग करने पे अग्री कर जाते हैं 8%, वो बोरोइंग करने पे देखे वो 7% से 8% पे आ रहे और आप 10% से 8% पे जा रहे हैं. तो somehow you get the market and you get the equilibrium price.
ठीक है सर.
ओके, मेरे ख्याल से सैटरडे के लिए काफी है. आप भी अपना एंजॉय करें सैटरडे.
Yes sir.
तो जाके पूरियां खाएं.
सर एक क्वेश्चन और है.
जी प्लीज.
सर वो इससे रिलेटेड ये है कि पेपर पैटर्न किस तरह का होगा, अगर आप किसी भी क्लास में एक्सप्लेन कर दें तो.
हाँ मैं बताऊंगा.
ठीक है सर.
उसके लिए परेशान. ठीक है, हैव अ नाइस वीकेंड, एंजॉय करें वीकेंड को. थैंक यू फॉर ज्वाइनिंग अस. जिन लोगों ने हमें ज्वाइन किया उनका शुक्रिया, जिन्होंने नहीं ज्वाइन किया उनका भी शुक्रिया कि उन्होंने तंग नहीं किया आगे. तो अब आ रहा, लेकिन ये कि इट इज दी. थैंक यू वेरी मच.